Bitcoin's trying to pump, but the market's got the jitters. We've got a rare bullish signal clashing with bearish whispers. What's the real story? Let's dive into the 5 things you need to know about Bitcoin this week. What's crackin', my Bitcoin believers and crypto market mavens? Welcome back to Gold Rush Crypto Daily, your trusty compass navigating the wild world of digital gold. I'm your main Bitcoin bandit, Gold Rush, and this week we're tackling the roller coaster that is the Bitcoin price action. We're seeing some promising technicals, but the traders are still scratching their heads. In this video, we're breaking down the crucial RSI breakout that could signal a bullish continuation for Bitcoin. But hold your horses, because we'll also be looking at why some traders are predicting a downside reversal all the way back to $80,000. Plus, we'll cover the all-important PCE data dropping this week, the pressure on short-term Bitcoin holders, and a glimmer of hope from stablecoin reserves on Binance. Let's get this Bitcoin breakdown. Alright, let's kick things off by acknowledging that Bitcoin is indeed attempting to bring the bull market back with full force, currently hovering near 2-week highs as the week gets underway. Data from Cointelegraph Markets Pro and TradingView is showing some positive momentum. However, don't get too hyped just yet, because the mood among traders remains cautiously pessimistic. Despite Bitcoin being up nearly 15% from its multi-month lows earlier this month, many analysts are warning that BTC-USD could very well see a fresh drop. Popular trader Crypt Nuevo, in his latest analysis on X, suggests that while the short liquidations at $87.1 thousand might have restored some market sentiment, it could just be a setup for the market maker, to shake out the market again. He's even eyeing downside liquidity nearer the $80,000 mark as a potentially lucrative target, advising everyone to mind the risk. Fellow trading account HTLNL echoes this cautious sentiment, describing the near-term scenario as not looking good for the bulls, and pointing to the $90,000 level as a potential ceiling before a reversal kicks in. Even among the most ardent Bitcoin supporters, the specter of the mid-$70,000 range still lingers. Arthur Hayes, the former CEO of BitMEX, has even thrown out the wild prediction that BTC-USD could advance to new all-time highs of $110,000 before experiencing a significant 30% crash. Trader Roman, meanwhile, added on short timeframes that he still believes we go lower before we make a run back to $88,000 to $90,000 resistance retest. So while Bitcoin is showing some short-term strength, the overall sentiment among many experienced traders is leaning towards a potential downside correction in the near future. Earlier reports also highlighted several key support trend lines that Bitcoin needs to reclaim as part of any sustained recovery, including the 200-day simple moving average, currently around $85,050, and the 200-day exponential moving average near $85,500. These levels are crucial for confirming any true bullish momentum. It's always wise to listen to the experienced traders, but the sheer divergence in predictions right now is making my head spin. $80,000 pullback or $110,000 moonshot followed by a crash? Crypto, you never cease to amaze. Now let's shift our focus to the broader economic landscape, because this week is all about the PCE, the Personal Consumption Expenditures Index. This is the last full trading week of the first quarter of 2025, and while stocks saw a bit of relief ending a 4-week losing streak, the overall ride for equities this year has been wild, mirroring the volatility we've seen in Bitcoin and the crypto market. The main date to circle on your calendars this week is March 28th, when the February print of the US PCE index will be released. This is famously known as the Federal Reserve's preferred inflation gauge, and last month it came in below expectations. The upcoming numbers are broadly expected to be similar. Financial market research firm Bespoke, citing the Fed's own estimates, sees positive developments for risk-on sentiment, noting that the Fed's inflation model currently estimates that both headline and core CPI and PCE will all have 2 handles, meaning inflation below 3% by March. This could potentially make room for further interest rate cuts down the line. However, the latest estimates from CME Group's FedWatch tool show market odds for interest rate cuts unchanged, with the June meeting of the Federal Open Market Committee still being the likely time frame for any easing of financial conditions. Adding a layer of complexity is the U.S. government's reciprocal tariff arrangement, which is due to go live on April 2nd. Fed Chair Jerome Powell himself cited tariffs as a driving factor in increasing inflation expectations during the latest FOMC meeting. He acknowledged that goods inflation has moved up significantly in the first 2 months of the year, and a good part of it is likely coming from tariffs. So, while the PCE data might offer some optimism, the looming tariffs could potentially temper any significant bullish momentum. The PCE data is definitely going to be a major market mover this week. Lower than expected inflation give Bitcoin the green light to push higher, but those tariffs are a wild card that could throw a wrench in the works. Now let's get back to the technicals and some potentially exciting news. When it comes to early signals of a bull market continuation, Bitcoin is currently showing some classic indicators. These all hinge on the Relative Strength Index, or RSI, a key momentum indicator that is in the process of breaking out across both long and short timeframes. Market observers are keenly watching bullish divergences on the RSI, which on the weekly time frame is finally abandoning a downtrend that has been in place since way back in November 2024. This crucial development was originally spotted by the eagle-eyed trader and analyst RSI Capital last week, and the process is continuing, with the RSI now seeking to confirm that downtrend line as new support before potentially heading significantly higher. RSI Capital himself noted that the daily RSI is also showcasing early signs of retesting that same downtrend as new support. Adding even more fuel to the bullish fire, fellow analyst Matthew Hyland has reported that BTC/USD has now confirmed a bullish divergence on the weekly chart for the first time since September last year. This is a significant signal that could indicate a major shift in momentum. The daily RSI at the time of writing was sitting at a healthy 51.4, comfortably above its key midpoint and fighting to hit new 2-month highs. This suggests that despite the cautious sentiment among some traders, the underlying momentum for Bitcoin might be building towards a significant upward move. This RSI breakout is the most exciting piece of news this week, in my opinion. A confirmed break of a 4-month downtrend on the weekly time frame is a serious signal that the bulls might finally be regaining control. While the long-term technicals might be looking promising, it's important to acknowledge that Bitcoin's short-term holders, those who have held their coins for up to 6 months, are currently facing some increasing pressure, according to on-chain analytics firm Glassnode. Their latest analysis on X revealed that this cohort is experiencing substantial unrealized losses, pushing many of their coins underwater, nearing a significant threshold. Historically, these newer investors have been more sensitive to short-term price volatility, and recent dips to multi-month lows have been accompanied by panic selling as many chose to exit their positions at a loss. However, zooming out, Glassnode observes that compared to historical extremes, the current loss-making sales are still relatively small. The rolling 30-day realized loss for Bitcoin's short-term holders has reached $7 billion, marking the largest sustained loss event of this cycle. But it's still well below the massive $19.8 billion and $20.7 billion losses seen in 2021 to 2022. Finally, we do have a glimmer of hope coming from stablecoin reserves on the largest crypto exchange, Binance. On-chain analytics platform CryptoQuant highlighted that the total ERC20 standard stablecoin reserves on Binance hit new all-time highs above $31.8 billion on March 21. This is a significant development considering Binance's position as the exchange with the highest trading volumes. While there could be several factors behind this increase, the most likely one is that investors on Binance remain confident and are preparing to enter or re-enter the market, potentially providing significant liquidity for a future price uptick. It's always tough to see newer investors facing losses, but the fact that stablecoin reserves are piling up on Binance suggests that there's plenty of dry powder waiting to be deployed when the market signals a clearer uptrend. What do you think about these mixed signals in the Bitcoin market? Are you feeling bullish because of the RSI breakout, or are you still cautious about a potential pullback? Let me know your thoughts in the comments below. If you found this in-depth analysis helpful, don't forget to smash that like button. And if you want to stay on top of all the latest Bitcoin news and market movements, hit that subscribe button and ring the notification bell. So, to recap, Bitcoin is nearing 2-week highs, but trader sentiment remains cautious, with some predicting a pullback. The upcoming PCE data could be a significant market mover. However, the RSI has broken a 4-month downtrend, signaling potential bullish continuation, while short-term holders are facing unrealized losses. On a positive note, stablecoin reserves on Binance have hit record highs, suggesting potential future buying pressure. What's your strategy for Bitcoin this week? Are you buying the dip or waiting for more confirmation? Let's discuss in the comments below. And don't forget to like and share this video with your fellow crypto enthusiasts. Thanks for tuning in to Gold Rush Crypto Daily. Be sure to check out our other videos for more in-depth analysis of Bitcoin and the wider cryptocurrency market. Remember, this is just my analysis and opinion, not financial advice. Always do your own thorough research before making any investment decisions in the volatile world of cryptocurrency. Stay safe, and may your Bitcoin bags stay